Good afternoon, everyone. Welcome to the 2020 Legislative Update webinar with the Iowa Department of Revenue, Iowa SourceLink, and the University of Northern Iowa. We're right at noon here, so we got it started. Everybody's still sort of filing in from waiting for the session to start. We are excited to have everyone here with us this afternoon. I'm excited to have Tim back for our third year to do this update. Today I will be your host. My name is Patrick Linsman. I work at the University of Northern Iowa. As you can see by the purple shirt today, coming to you from Cedar Falls. We've got Tim Riley, who's the Sales and Excise Tax Policy Director from the Iowa Department of Revenue, coming to us from Des Moines. We've got a good presentation put together for you today. If you want a copy of the slides, I will continue to post the link in the chat. You should see it there now. You can click that link and download yourself a copy of the slides. And I'll post that periodically throughout today's presentation to make sure everybody has it. This session is being recorded and will be available to watch after the fact on iasourcelink.com as well as the Department of Revenue website. If you do have questions throughout today's presentation, you'll find that you can enter those into the Q&A box, and we will stop at various points throughout the presentation to address those as best we can. And if Tim can't address them, he'll make sure to get you the way to contact the department so you can get the answer that you're looking for. So go ahead and get those slides downloaded. And then, as I mentioned, today to present to us, we've got Tim Riley, the Sales and Excise Tax Policy Director. Tim, take it away.
All right, thank you, Patrick. Hi, everybody. Thanks for joining. As Patrick mentioned, I'm Tim Riley, the Sales Tax Policy Director for the department. I also here in my now former capacity as the department's legislative liaison role I did for the past 3 legislative sessions, handing that off to somebody else for the upcoming session. But I was the department's point person over at the Capitol, so for this past legislative session, and then also working from home in June whenever they wrapped up. I'll try to give you an update here on things that happened this past session. This is my first time doing this with multiple monitors in front of me, so I'll try to just bear with me if I'm staring in the wrong place, but I'll try to make sure it runs as smoothly as possible. So here's our standard disclaimer about the fact that this is not legal advice. This is general guidance. Here's a brief rundown of the bills that we'll talk about today. Obviously, some we'll spend more time on than others. The House File 2641, if you've looked through your slides yet, probably makes up about half the slides. It was a substantial piece of legislation, so we'll spend more time on that one, obviously. But a couple other things worth noting. Sometimes bills have tax impacts that not everybody realizes, like this first one. Senate File 155 is a fairly short bill, deals with allowing mobile barbershops, letting barbershops operate in movable locations. And so the department, of course, has, the current Iowa Code taxes the service of barbering and beauty. And so the department has an administrative rule related to barbershops, and that will need to be updated because it talks about barbershops being in one particular location. So I'm working on that rule update right now, and it should be done soon. But just an interesting bill that probably not a lot of people might consider has a sales tax impact, but perhaps some of the people watching today have clients who operate or might be interested in operating mobile barbershops or things of that nature. So certainly worth mentioning. Second bill probably impacts a few more people. Anybody who drives a car. in the state of Iowa buys gasoline will feel the impact of this. This was a bill to modify the sales tax rates for certain types of gasoline. The existing, prior Iowa code, prior to July 1 of 2020, had a particular rate there that you can see in Table 2 on the left for blends of gasoline with that were 10% ethanol or more, referred to as E10. And you can see that the scales change for the rates change based on how much E10 versus straight gasoline was being sold. That was set to expire and did expire on June 30th, and the legislature replaced that with different rates for E15 rather than E10. So in Table 1 there on the right of the slide, you can see the rates going forward. There's no longer a variable rate for regular gasoline. It's just a solid 30 cents, regardless of the E15 sales rate. The bill also extended the rate for biodiesel blended diesel fuel, so B11, similar to the E15 reference. So biodiesel that is 11% or more biofuel will be taxed at these rates that you see below. That's not a change, but it was also set to expire, and so those are extended through the end of June 30th, 2026. A couple other things that the bill did. There was also a lower rate for E85 that was allowed to that was removed from the code, and then also made a change that specifically refers to how the distribution percentage, those percentages that determine the rate from those tables a couple slides ago, it now specifically requires that it be an annual report that the department collects from retailers rather than monthly reports, which had been used by the department in the past to make those determinations. Typically, there's a much higher rate of compliance with submitting those forms, the annual form, to the department. So from fuel retailers, so it should be a more accurate representation. And then lastly, it sets up a 5-year review of these rates, essentially, by the legislature. Does anybody have any questions about Senate File 2403?
I don't think we've seen any questions come through yet, but if you do have questions for Tim, do go ahead and enter those into that Q&A box, and we would be happy to address them if we can. He's going to try to. We can see you're messing with your sound devices. We had a couple. Yep. Oh, you're doing it. Yep. You just drag that to the other screen. That's fine. No, there is a little bit of feedback. So if we lower that sensitivity, there might be some relief there. If not, that's all right. We'll continue going. We can understand you. There's just maybe a little bit of choppiness to it. So, but if you do have questions around hotel, motel, or any of the other files as Tim's talking, please do go ahead and enter them into that question and answers box.
Yeah, right. I'll try to tackle questions as you guys have them. So, yeah, if you have something comes to mind about the motor fuel bill, feel free to ask. We can come back to that. Moving on to our third piece of legislation from this session. House File 760 made some modifications to exemptions for the hotel motel excise tax. Under prior law, so before July 1, 2020, the sales price, the price for renting lodging, if it was rented by the same person for more than 31 consecutive days, the entire rental is exempt. Starting July 1 of 2020, the renting, if it's rented by the same person for more than 90 consecutive days, then it's exempt after that period. So it no longer exempts the entire stay, which was how the prior version of the exemption worked, and obviously it's much longer now. So the stay has to be for more than 90 days, and it's only exempt beyond those 90 days. It also created a new exemption for people staying at nonprofit lodging providers, where the purpose of the lodging is to let friends and family of hospital patients stay while the patient is at the hospital. The code language specifically refers to hospitals, and so that sort of narrows the scope of what the legislation can apply to. It doesn't apply to hospices or nursing homes or other types of similar facilities. It does refer to hospitals specifically. So keep that in mind if that's something that that comes up. We did get quite a few questions over the summer. Of course, this bill I think was signed by the governor. It was late June and went into effect on July 1. So there's not a lot of time given the extended end date of the legislature, thanks to the COVID break that they took. Not a lot of time to educate taxpayers and businesses on how this would work, but the department did get some guidance up, I think, sometime in July or August, to try to answer some questions. So I've got the link there for you. Please check that out if you do have additional questions. I see we've got one question. So if this is another common question, and it must not be addressed on our guidance, probably worth adding, because I've answered this a couple times now, but it's a good question. Someone asks if somebody stays, if they check in on June 30th, stay for over 30 days, if it's over 31 days. But if the check-in started, if the stay at the lodging at the hotel started before the law change, then the old provision would apply. So I think that's what you're hinting at. Does that fall under the old rule? Yes. If the hotel stay starts before the law change. Any other questions about the hotel exemption, hotel excise tax exemption changes? All right. Moving on. This was another short piece of legislation, House File 2340. Made some modification to how people could use funds from 529 savings plans for what types of schools they could use the funds for. Basically, it just allows for people to use the funds for schools that are out of state. It does require that the school the school has to be able to teach a child with special education needs, but other than that, it's applicable to any out-of-state elementary or secondary school. And that's effective for tax year starting January 1st, 2020. So that'll come into play for the first time next tax filing season for individuals. We'll talk a little bit more about other 529 changes in just a minute, but this bill is specifically just for out-of-state use. All right. So we'll spend some time here on House File 2641. This bill started out as a proposal from the department. The department's first proposed piece of legislation in 5 years. So there was a lot of cleanup that the department was looking for. But obviously, the bill changed after we submitted it to the legislature and started moving through the process. Pieces were added, pieces were subtracted. So certainly not all of it is came from the department, but many of these, at least this first slide on administrative provisions, a lot of that did come from the department. So we'll just highlight a couple of these things. The first piece allows the department to, through a 2080 agreement, through a contract essentially between a government entity and another entity, allows for state or county fairs to collect sales tax from vendors at the fair. Previously, the vendors were supposed to, and they still need to get their own permits with the department, but they can now, rather than remit their collected tax to the department after the fair, they can, if one of these contracts is entered into, which none of them have yet, but they can just remit their tax. The fair will collect the tax at the time that the fair collects other payments from vendors. This is obviously not required for all fairs, and there are no, there was no state fair this year, obviously, so we were ready and willing to have this ready to go for the state fair this year, but we'll certainly have it ready for next year assuming the state fair happens in 2021. So the department proposed some additional penalties for late filers or non-filers of returns who did not have tax due. This is kind of in line with some other changes that we'll talk about for partnerships in general in a few slides. But typically, people who are, and it's not just pass-through entities, but other there are taxpayers out there who may have an obligation to file a return with the department, but may not have to pay anything. And penalties in the past were based solely on tax that was actually due to be remitted by that taxpayer. So if the taxpayer owed $0, there's no potential penalty for them not filing the return itself. So we added some language to clarify that there are penalties now available for taxpayers who do have an obligation to file and don't file. We recommended that we push out the effective date for this provision to give taxpayers and preparers time to be prepared for this, so that they know that for filings related to 2022 and after, there will be penalties. There can be penalties assessed if they do not file. So the department included a couple of changes to penalties for fraud and perjury. If you look at the bill itself, they look more like new penalties, but we wanted to clarify a couple of things that fraud and perjury were always potential penalties for if those crimes applied to interactions with the Department of Revenue, but we wanted to make some clarifications as to how those would work for our purposes. So rather than modify the entire criminal code, some new penalties were added that are almost identical, but will be easier to enforce for the department. The department requested and is now able to publish its taxpayer bill of rights on our website rather than on paper, which is good here in the year 2020. It's now up on it's actually up on our website now, and if you may be familiar with receiving a paper copy of it along with other letters that the department sends out. I believe we have started, but we will start if we haven't already, sending a little slip of paper for a little while that says the taxpayer bill of rights that you used to receive is no longer going to be sent with these letters, but you can go to our website and find it there. Of course, if anybody wants a paper copy of the taxpayer bill of rights, they can just let us know and we'll send it to them. Still happy to do that, but this will cut down on pieces of paper that we print, and then anytime a change has to be made, make it easier to make sure that people are using the correct updated version of the taxpayer bill of rights. The department also proposed some language that was included in the final version of the bill to clarify when and what information shall or may be redacted. I won't go through each of the iterations of this, but it depends on if it's pursuant to a public records request or for involved in an appeal, a protest, or after a final decision from the director. So there are different elements that apply to what information can or shall be redacted from certain information before we publish that information. Another piece that I added this morning, so if you're following along, I forgot to include it, but I figured it as I was going through the slides again this morning, I realized that it might be worth mentioning here. You'll see on our forms that we're currently working on finalizing for the upcoming tax season. Anytime on a form that it said that tax was, or if the taxpayer is writing a check, they were to write a check to the treasurer of state. We changed that language to make checks payable to the Department of Revenue instead. The treasurer's office was certainly on board with that change. At least that's what I was told. So it should make things simpler for taxpayers in interacting with the Department of Revenue, that they make checks out to the Department of Revenue going forward. A couple of changes related to assessors and property tax in general. There is some code language that allows for the electronic submission of data included on a declaration of value. It doesn't change who fills out a declaration of value or where the form goes, but allows for electronic submission of that information to the department. For county assessors themselves, they are starting July 1, 2020, no longer allowed to assess their own property. They'll be subject to confirmation by the Director of Revenue, and then county conference boards cannot hire outside counsel without prior approval of the county's attorney. So, move to the sales tax provisions from House File 2641. First is adding a definition of computer peripherals. This relates to an exemption for computers for certain taxpayers, certain types of businesses. There was some ambiguity about the definition of computer and what is a computer, and the state. When the state joined the multi-state tax group called Streamlined about 15 years ago, adopted a definition of computer for the code, but we had some rules that never got updated that were not in compliance with that definition. So, computer peripherals are things that certain taxpayers would try to assert under the prior structure of law and rules, qualified as computers. So to try to avoid any conflict with the streamlined requirements that we follow that definition, the legislature added this new definition and added it to the exemption where computers are also exempt. So the next two bullets relating to digital products and services are some cleanup from Senate File 2417 from 2 years ago. That bill expanded the sales tax base in general, made more types of software taxable, and also created and made taxable new terms specified digital products. It came to our attention last year that there was one potential scenario relating to software that was not specifically addressed by that legislation, and that is the service of customizing canned software or software purchased off the shelf that is then delivered in a physical form. So I'm not sure that this is even a situation that typically happens, but if it is to happen, then now that service would be taxable. And we recommended this change because all other services and purchases of services related to software and purchases of software, however the software is delivered, are now taxable. This was just one minor potential scenario that was not addressed by the bill. So now all types of software and services related to customization of software are taxable. We also added a reference to specified digital products to the taxability of bundle transactions. This actually relates to an exclusion from what is a bundle transaction. We felt that it was fair to treat if what someone was buying is a service, and they also get, under prior law, it said tangible personal property along with that, then the intent of the if it was a taxable service, then the whole purchase is taxable. If it's not a taxable service, then that purchase is not taxable as a bundle transaction. So we added specified digital products to that. So it's treated similarly to specified digital to tangible personal property in those situations. Question about software, and this relates to subscriptions. For example, Office 365. That was another piece from Senate File 2417. So a specified digital product would include digitally downloaded software, things of that nature, and also that bill included subscription services. Without additional details, I think most likely that is probably a taxable purchase. Another good question about customization of software. Is it taxable for commercial enterprises? Theoretically, yes, but there's also so the fact that it's taxable applies to all taxpayers, but there is an exemption that applies to commercial enterprises, and so that the change that was made in this piece of legislation makes the customization of physical software also exempt for commercial enterprises. So that exemption applies to them as well. So it should be, all software should now be treated the same for individuals and commercial enterprises as well. Hopefully that answers the question. The exemption is for specified digital products and other items, software types of things of that nature. If it's purchased by a commercial enterprise, which has its own definition, used exclusively for, okay, that answers the question, used exclusively for the commercial enterprise purposes. So the next item that I want to mention relates to tribal governments. This is new code language, but not necessarily new law. So there's an exemption for government entities, and it specifically mentions other types of government: federal government, state government, local government, agencies, commissions, etc. Did not have a specific reference to tribal governments, which not surprisingly would lead people to believe that tribal governments were not included. But through some federal laws and treaties, the department has always treated purchases by tribal governments as exempt. So we were adding this to the code where it talks about other types of government exemptions, government bodies that are exempt from sales tax, so that it's all in one place. It should be easier both for taxpayers and even for people in the department to be able to answer questions about when that comes up. So, several pages of the bill relate to construction projects. The code provides for both an upfront exemption and a subsequent refund for certain construction projects. So they were not completely in line. There were certain things that were refundable but not exempt upfront, which was confusing for taxpayers and for staff here. And if it was exempt, if it's not taxable as a refund after the completion of the project, why not make it exempt upfront? So we spent a couple pages of the bill trying to streamline these two provisions, the exemption and the refund. So now, in general, contracts have to be written for the exemption or the refund to apply. Services can be claimed as an exemption as well as a refund, and the exemption or the refund will be allowed if the materials are completely consumed in the performance of the project, and if the project becomes the result of the project becomes property of the entity that is claiming the exemption, that was sponsoring the construction project. So it's a little complicated if you're not familiar with construction law, construction sales tax law, but in general, it should make things work a little more smoothly, make things a little easier for both taxpayers and for the department. Another piece that relates to some cleanup from the Senate File 2417 from a couple of years ago, and also the Supreme Court decision of June of 2018 that changed how sales tax impacts remote sellers. We felt it was a good time to make some clarifications as to who's liable for what type of tax. After that Wayfair decision in 2018 and the law changes from that session, out-of-state retailers can be required to collect Iowa sales tax if they make over $100,000 worth of sales into the state. So we felt there was this was a good opportunity to clean up some language that was a little out of date, potentially confusing. One thing that is not necessarily a new change, but we were trying to clarify. The code talked about liability for retailers and purchasers on transactions where the retailer did not necessarily collect tax at the time of the transaction. Code always mentioned that the retailer and the purchaser were both liable, but it didn't use the phrase joint liability. So we thought that was more easily understood. Will help people understand that the retailer is always going to be responsible for remaining sales tax, but if a purchaser buys something and the retailer does not collect sales tax at that point, the purchaser is then liable for use tax, and that liability is joint liability. We also added some language that clarifies that if the purchaser remits use tax, the retailer is still liable for any unpaid local option sales tax because there's no local option use tax that can be imposed. So all of that is hopefully is an attempt to clarify obligations related to sales versus use tax. The last piece from sales tax I think worth mentioning was after the coronavirus outbreak, certain manufacturers started creating protective equipment that maybe they're not necessarily in the business of producing, and if they had purchased equipment or supplies or materials that would be used in an exempt manner under the normal operations, and they purchased that material or equipment without having remitted sales tax, they would then potentially have a use tax obligation if they sold it or if they gave it away. Excuse me, as a lot of people did give away, things like hand sanitizer or masks that they were producing earlier this year. So, just to avoid, the legislature thought it was a good idea to avoid trying to create an opportunity for the department to collect tax from manufacturers who are producing PPE because of the pandemic. If you do want additional explanation on any of these sales tax changes, we, similar to the hotel motel excise tax change, drafted some guidance, put it up on our website, sent it out. If you're signed up for our Grub deliveries, you would have received an email, particularly the sales tax one, would have received an email a couple of months ago now, including link to this guidance document. So feel free to check that out if you do have additional questions on sales tax. So we'll move into the income tax provisions, and I will remind you that I'm the sales tax policy director, not one of our 3 income tax policy directors. So I may not know the answer to every question, and if I can't answer one, I'll try to follow up with you afterward and get your question answered. The department included some language making some adjustments to net operating loss carryback waivers for individuals. So taxpayers can elect to waive the entire carryback, and if they do that, it's irrevocable. They can't then claim it, and it would have to be then carried forward for 20 years. And under the law change, farming businesses that do have a loss can elect to carry it back for 5 years. And this is effective for tax year starting in 2020, so for next filing season. I do have a question about NOL. Do the new rules apply for election to waive carryback even if no federal NOL exists? That I'm not positive of. So I will, I'll make a note of that, and I'll follow up with some of my colleagues and try to get back to you. A couple other of the income tax changes. The legislature decoupled from federal limits on deducting business interest expense. That is effective January 1 of 2020. The legislature also decoupled from something called GILTI, Global Intangible Low Tax Income, which is, both of those were the GILTI at least was created by the Tax Cuts and Jobs Act, the federal legislation at the end of 2017. And that change is effective for tax years beginning on or after 1/1/19. The department proposed some language to modify the innocent spouse provision. You can see there, we can allow a spouse not requesting relief from joint tax liability to intervene in our process when deciding whether to grant relief or not, subsequent to this change now. And also the school tuition organization tax credit, so a relatively popular one. The legislature raised the cap on claims for that to $20 million, and also eliminated the corporate cap, the cap on how much of that $20 million can be claimed by corporate income taxpayers. Another NOL question came through. Now that federal law requires taxpayers to elect to claim or forego NOL carryback on 18 and 19 returns, will that mean a change on Iowa returns? I don't believe any changes are required for prior tax years because of the federal change. I don't think we're not coupled with that, if I remember correctly. Question on the PPE use tax exemption. Yeah, I did mention that. I can come back to that again at the end if we have a few minutes. Try to get through the rest of the slides before I come back to that. But hopefully I can, if you stick around at the end, at least I can mention it again. So the department had moved tax filing deadlines for individuals so the IRS moved them to July 15th. You may all remember the department then moved its Iowa filing deadlines to July 31st, the end of July. The moving of that deadline did not, and the department didn't have authority to change the contribution deadlines for a couple of the when certain accounts, the 529 accounts and contributions to first-time homebuyer savings accounts had to be made. So the legislature did address those in the bill, move those to the filing deadline, which made sense, made things easier for filers this year. Another COVID-related provision exempted certain small business grants. The small business grant relief program, I think was the name. Don't necessarily quote me on that, but I think that's what it's called. It's one of the first grant programs rolled out by IEDA. The legislation specifically mentioned the name of the grant program, so it is only for those grants and not for other grants created by either the state or the federal government, whoever it might be. In general, grants are taxable in Iowa, so that's why this provision was required to exempt those grants. And then that relates to the next bullet point. There's also there had been separate legislation earlier this session, in the 2020 session. It got folded into this bill to exempt grants related to broadband infrastructure. And then there's one other additional change here related to 179 expensing. The state coupled with federal changes starting 1/1/20. There were additional changes related to when taxpayers have to report changes of federal income tax that is due. And you can see here there were changes to the state adopted a definition of final determination date that would start the time running for when people have to notify the department of certain changes. But also creates an exemption for penalties, and then moves deadlines for both assessments and refunds related to changes in federal income tax liability. One of the larger sections of the bill, as proposed by the department, related to partnership and pass-through entity audits. The department used largely model legislation from the Multi-State Tax Commission, but obviously made various adjustments to that to make it fit with the Iowa code, and also created an Iowa level regime for audits of pass-throughs. So the very high level explanation is that partnerships under prior law were required to, if a partnership were audited and found to have liability, each of the partners would have to we would have to interact with each of the partners. They were each liable for their own share of what the partnership owed or was due. And now partnerships can have election. The partners can elect to have partner, one person be a representative of the partnership in dealing with a potential audit with the Iowa Department of Revenue. So it should make things simpler, particularly for types of entities that have dozens or hundreds of partners. The last piece I wanted to mention, just briefly, was a budget bill from this year. In addition to the department's standard general fund appropriation from the Administration and Regulation Budget Subcommittee budget, the department was appropriated a little over $4 million from the Technology Reinvestment Fund, House File 2642, typically called the RIF bill, to support an upgrade to our tax processing systems. If you interact with the department, you may know that there are certain things we can or cannot do that are limitations of our existing systems. Some of them are older than me and are written in code languages that nobody uses anymore, so it's a bit overdue, some people might say. One of the things that we're hoping to get out of a new tax system will be a portal that individuals and any unique taxpayer will be able to go in and interact with the department. Be able to see what they owe, submit and file things electronically to the extent that that's not possible today. Make payments. Check to see if they're all sorts of different possibilities. So hopefully it will improve taxpayer interaction with the Department of Revenue, make our lives easier, make taxpayers' lives easier. So a couple of things if you need additional resources. Obviously mentioned a couple of times today the impact of COVID-19 on everything we do here at the department. If you are looking for additional guidance, we created an entire page on our website. You can find it right from our homepage, but there's the link. If you're looking for the specific link, and there's all sorts of guidance on there as it relates to a variety of programs. And additional guidance related to whether we're coupled or decoupled with the Federal CARES Act, but not coupled or decoupled, but whether we conform to certain provisions or not. You may recall from Senate File 2417 where we're now coupled with federal changes for that start 1/1/20 and after, but the CARES Act made changes retroactive, and we may or may not be coupled with some of those provisions. So if you have questions about that, I would certainly look to that guidance. And if you, going forward, if you do have additional questions for the department, you can use the tax guidance submission link that's located there on the slide, and submit your question to the department. I will say not every question obviously gets an immediate response. Quite a few of the questions, we do see quite a few repeat questions, and we will use that information to generate additional broader guidance. So while you may not see a specific response to your question, we do review those and try to build. We use our resources to try to build broader, broadly applicable guidance for multiple taxpayers and get that up on our website. So, similar. That's how we were prompted to do the guidance for the House File 760, the hotel motel excise tax exemption changes, through seeing repeated questions from our guidance. So while you may not see, you may not get a specific response to your request, we definitely look at them and incorporate changes on our guidance pages. So let's see. Looks like Alan was able to find an answer to his question about NOL carrybacks. Okay, yeah, I think that makes sense. That the carryback applies even if there was no carryback for federal purposes. So I'm glad you got that one figured out. Question about a form that I've never heard of. So a 1099 NEC form. I'm not positive whether a separate form needs to be sent or not. I don't know. I know we're close to finalizing forms for the upcoming filing season, but I know some are still in progress. But that one is not one that I've worked on. I reviewed all the sales tax forms, but not the anything income related, or I guess a 1099 NEC. I'm not sure how that differs from other 1099s, but I'll try to get in touch with the person who sent that question and follow up with an answer. I can do a little research on that. On the PPE use tax exemption, got a couple minutes to come back to that. The intent there was for manufacturers of well, it could be anything, who then this year, generally in response to the pandemic, started producing PPE. They may have, if they purchased equipment or supplies, materials, supplies and materials, I don't, if I remember correctly, it doesn't apply to equipment, but if they purchased inputs to whatever they're producing, if they purchased it without paying sales tax, if they were going to, be able to claim a sale for resale or some other type of exemption, but then they took that inventory and then turned it into PPE and gave it away for free, didn't sell it, then, under a strict reading of use tax, if they purchased something exempt from or without paying sales tax, and then weren't eligible for an exemption subsequently, they would be responsible for remitting use tax. This provision created an exemption from use tax to address that situation. I don't know that the department would have. It probably would not have been a good look for the department to go out and try to collect use tax from people producing PPE and giving it away for free. But if the department had chosen to do so, those things are now exempt. So, we've got a couple minutes left, but I see some responses regarding the 1099 NEC. There's a link to the instructions there for the 1099 miscellaneous. Yeah, I'll check and see if there's something to be done differently for Iowa purposes regarding that, and try to follow up with you, Stephanie. So, but yeah, that's what I've got.
All right. Well, Tim, thank you very much. Great presentation. For those questions around this 1099 NEC that's replacing the 1099 miscellaneous, yeah, we can make sure you get Tim gets your information. He'll be able to follow up and get you those answers. That we're pretty much out of time for today. So thank you to everyone who's participated with us that's still here. Again, this session has been recorded and will be available after the fact on both the Department of Revenue website as well as iowasourcelink.com. We do have 2 more webinars up yet this year. I did just post the link. In November, we're going to be looking at some common tax issues. And then December, we're going to be looking at the everyone's favorite topic of W-2 and 1099 filings for 2020. So do go out, check that link. The registrations are both live. We'd love to have you come back and see us for either of those. Again, Patrick Linsman, happy to have hosted this with the Department of Revenue, the University of Northern Iowa, and Iowa SourceLink. We hope to see you in the next one. Tim, great job. Thanks for being with us today.
No problem. Happy to do it.
All right. If you have any other questions, please feel free to reach out. Otherwise, we look forward to seeing you in one of our future webinars. Take care, everybody.